afternoon, everyone, and welcome to the first session of Unlock the Stock for 2024. We're very pleased to welcome Afrimat back to the platform. They've been a long-standing supporter. Andries van Heerden, the CEO, and Colin Ramakabati, an Executive Director, will take you through a presentation shortly. This Unlock the Stock platform is specifically designed for retail investors to gain access to corporate management and to get to know them and their companies just a little bit better. As you know, Unlock the Stock is only possible through our technology partner, Lumi Global. You can visit their website at lumiglobal.com and learn more about Lumi's various AGM and investor presentation solutions, which are usually done online. Our hosts, as always, are the Finance Ghost and Mark Tobin from Coffee Microcaps, and they will be facilitating the Q&A session at the end of the presentation. Before we start, just a few housekeeping notes. Andries and Colin will take you through a presentation, which will be followed by a Q&A. Please note that you can post your questions in the Q&A box or the chat function at the bottom of your screen. The event is being recorded and will be available on the Unlock the Stock YouTube channel, probably around Monday, for you to go and have a look at. You will also see an email address when we begin the Q&A session. If you'd like to be added to Afrimat's distribution list, please can you email that address. Andries, I think we are ready for you to do your presentation, please.
Thank you very much, Vanessa. We'll just wait for the presentation to be shared. Vanessa, maybe you guys can share from that side. It seems that we have a bit of a technical problem here.
Okay. From my side, I can see it, Andries. It's up on the screen.
Is it on the screen? Okay, there it is. Okay, good. Thank you. Yeah, apologies for that little delay. So yeah, good afternoon, everyone, and welcome. We will share with you a little bit about our company this afternoon. And it's not moving. Sorry, there we go. Good. Yeah, so we'll tell you a little bit more about Afrimat, and we'll also try to show to you that we are consistently delivering reasonably good results in quite a challenging environment. The business is doing really, really well. We've also done quite a number of strategic projects over the last couple of years, and we are making very good progress on that. And we'll try to share something about our company culture and how we do things and how we execute in our business. So maybe just to start quickly and share with you what we do. We, as a company, we have basically four major business units. Our construction materials is where it really all started, which is mostly aggregate. So we operate quite a number of quarries around South Africa. We probably have the widest footprint of any aggregate supplier in South Africa. We then followed that up with a diversification into industrial minerals. So we do limestone, dolomite, and a little bit of industrial sands from that business unit. Then in around about 2015, we diversified further and we started mining iron ore. We now are one of the four iron ore exporters on the Ore Exporter Users Forum. And we also supply quite a significant amount of iron ore to the domestic market. And we operate an anthracite mine in Mpumalanga. Our latest addition to our business is what we call Future Materials and Minerals. It's a business that's more focused towards what we see the future is going to need. In there, we have our phosphate business, which is focused on the agricultural market, and our rare earth elements, which is in the same mine. And that's really an element that we believe is going to be very, very powerful in the future. So a well-diversified business. And over the years, it's given us a very, very good growth rate. Our compound average growth rate since February 2009, which was after the global financial crisis, until February 2023, was 18.9%. And our return on net operating assets is around about 22.7%. So if we look at how we are focusing this business, starting with construction materials, that is a business that after the 2010 World Cup, we saw that construction in South Africa became under pressure. But we've been running this business quite efficiently. We have a very strong efficiency drive at the moment and trying to grow this business. We are at the moment seeing quite a good recovery from what was quite a low point just after COVID. We saw a decline in volumes. We're starting to see that coming back. And specifically government infrastructure, road projects and rail projects around the country is really starting to show a very good improvement, and we're quite happy. We also recently announced the Lafarge South Africa takeover. We are waiting for the competition tribunal, so we have all the approvals from the Department of Mineral Resources, from the Reserve Bank, and even the Competition Commission has recommended the approval, but now the competition tribunal must rule, and there's some obstacles around there, but we hopefully will overcome that in the not too distant future to get the competition tribunal approval, and then we can then carry on with that takeover. If we look at our mining side, our bulk commodities, on the international side, the iron ore price at the moment is reasonably high. It's around about $120 per ton today, which is a very good price for iron ore. We are a little impacted, and those of you that have seen earlier this week have seen Kumba's results, and obviously they are 100% exposed to the export market. Fortunately, we only sell about 40% of our iron ore on the international market. The rest is domestic. And Transnet is underperforming. We are involved with the Ore Exporter Users Forum and we must say that there's a lot of cooperation nowadays from Transnet, especially with the new management there. So hopefully that'll improve, but at the moment it is impacted. On the domestic side, we saw year on year, we saw a very good improvement on our domestic sales. Although Transnet, once again, on the inland domestic rail side, is under severe pressure, fortunately, given just the location and things like that, it is overcome by trucking, and we are trucking the product in. Our latest addition to our bulk commodities business is our anthracite business, the Nkomati anthracite mine in Mpumalanga. This is a very interesting asset. It's the best quality anthracite in South Africa. It's really, really good quality material. The mine has a history of having its challenges. It's not an easy mine. We took it over just before COVID, and since then we've turned the mine around. The mine is, at the moment, we are seeing a very good ramp up of that business, and it's starting to perform really well. We've developed 3 mining areas with 2 open pits and an underground shaft. We've upgraded the coal washing plant. We found markets for what we call the high phos material that has a limited market in South Africa. We found international markets for that, and that business is really, really doing very well at the moment. We can get the next slide there. Our industrial minerals, it's a very small part of our business. We had a few challenges around load shedding and things like that. We've now installed good generating capacity on that, and it's doing really well. But we did have quite a long period during the year where things were a little tough on that, but it's very small, and hopefully in the next year we'll see the full effect of what we've done to fix that business. Future minerals and metals, or future materials and metals, we bought the business recently. We've been investing capital. As we speak, we're busy commissioning the single superphosphate, the SSP plant, and we are ready for the agricultural season that's on us. and hopefully we'll start seeing that business contributing in the next financial year. So if we look at Afrimat from a strategic point of view, we're trying to maintain our growth rate over a long period of time. For that, we diversify the business quite well to not have an exposure to any specific market. The Nkomati anthracite mine is really starting to perform well. The Lafarge transaction, we are ready, and we've got a very strong team of people that are ready to move in there and turn that business around and make a significant contribution from there. And Glenova, as I said, is the longer term play that in time we also need to position the business to be able to play in this space over the long term. Maybe just quickly, why are we diversifying the business in the way we have done? South Africa is not an easy place to do business in, and things happen suddenly, and you've got to be able to react. So having a diversified portfolio is pretty much like having a diversified investment portfolio. It does give you a relatively smooth growth rate over time, and as you can see on the graph there on the screen, the blue line at the bottom is what we would have reported had Afrimat remained a construction materials player alone. The red line is actually what we did report, and the gap between the two lines is really what the strategy has delivered in terms of diversification. It gives us a good blend of locally priced commodities as well as internationally priced commodities. We have exposure to different currencies. We have exposure to different economic cycles in the different industries that we play in. But we do that all with the same operational skill set of mining and operational skills that really makes Afrimat different. And having this diversification also creates many different opportunities in the different spaces as time goes on. Then, as an investor, you would probably want to know what are those moats that Afrimat has, and there's a couple of angles of looking at it. Firstly, from a unique competitive advantage point of view, we always look for assets that either has a unique geographic location where logistics is an important part, or where we have a unique metallurgy. For instance, as I mentioned, that in Nkomati, this is really unique. Or where we have a structural cost advantage. We have an iron ore mine in the Northern Cape called Jenkins Mine, which really has a structural cost advantage because of just the fact that it's a direct shipping ore that is relatively shallow and easy to mine. And then the last and probably the most important part of our competitive advantage is really the company culture. It's something that Colin and myself drive very hard to make sure that we have the right company culture, which is really based on what we call excellence with integrity. And we create an environment where people enjoy working and where they can do their best. Second moat is our respect for capital. We have built over the years, Afrimat has built a track record of good capital allocation. We have, as we speak, an extremely strong balance sheet. Our return on net assets in the last round when we reported was 22.7%, and the business is highly cash generative. Then the third moat is really our ability to execute. We get things done rather quickly and efficiently, and the way we do it is in a multidiscipline approach where all the different aspects from engineering to the sustainability team, the IT team, finance, the whole lot, get together and we focus on the same task, and we project manage our projects in such a way that we get execution and get results rather quickly. The team that we work with is also quite a resilient team that is quite disciplined in how they execute and how they get things done. Now, maybe just in showing some of the strategic initiatives I touched on just now when I spoke about construction materials, and this is actually for our, this goes for our entire business. One of our strategic focus areas is the whole thing around efficiency and making sure that we remain ultra efficient. Now, Afrimat's always prided itself in the fact that we are an efficient operator, but by using technology and using the latest thinking in terms of operational techniques and process and things like that. In our Demoning mine, for instance, we've managed over a relatively short period of time, within 6 months, we managed to reduce our rand per ton hauling cost by 21%. And in Komati, our anthracite mine, in the same period, we managed to reduce it by 14%. And Glen Douglas, which is one of our larger quarries that we operate in the construction material space, we managed to reduce our load and hauling cost by a whopping 34%. Now, that offsets any inflationary pressures from diesel prices and electricity costs and labor costs and things like that, and really keeps the business highly competitive. Let's get, there we go. Right. So what I tried to share with you before I hand over to my colleague to talk about our, let's call it the ESG side or the sustainability side of our business, what we really tried to show is that our diversified model is working. We are strongly cash generative, and the business is hopefully going to stay like that. We're doing every effort to keep it like that. And we are ready to implement the Lafarge acquisition, which is a significant contribution, especially when we unlock the full value of that business. So with that, I'm handing over to my colleague, Colin. Hope you have more luck with the technology than I have.
Thanks, Andries. Good morning, everyone. Well, good afternoon, rather, after 12 where we are. So, yeah, I think Andries touched on a bit with regards to culture, where we aim for excellence with integrity as almost like a theme wording that we want to achieve. And if we look at our ESG side of things, I mean, the biggest issue for us is the culture. We believe strongly that our culture sets us apart from most other companies out there. We can all have the right mineral reserves, good source. We can all have the same machines that we use to operate. You can all do things exactly the same. But the only thing that will probably set you apart, especially mostly in South Africa at the moment, is how you do things. And that's what I think we do at the moment as Afrimat. And my aim today basically is to show you a bit of how we do it. And by doing that, I will be focusing mostly in terms of the jobs that we've created, how we train our employees. And the other thing is health and safety. It's also something that we value highly. And then also regarding communities, again, a huge, big thing in South Africa at the moment. If you don't know how to engage them as a mining company, you are in trouble. And we feel strongly that it's something that we are proactive about it, and we do our best to engage our communities. And therefore, we invest a lot with regards to our communities. And the reason we also do that is because we have a lot of mining licenses. As you can see there, we've got about 45 of them, which makes us, that we engage a lot with the communities. And also, this also enables us to engage a lot with our stakeholders like DMRE, which then initiate us that we need to try and have a good relationship with them. And then lastly, we'll also look at a bit of our carbon neutral strategy going forward. So looking at our employees, I think this is a half-year results that we've shared with most people who have seen these slides. At the end of August last year, we had about 2,800 employees. Training and development is something we continue strongly. There's about 4,666 days that has been spent towards training our employees, and we invest heavily on that. We haven't stopped recruiting, obviously. As you have seen the amount of growth that we've experienced, we keep on recruiting more. And halfway in the year, we had 464 employees that were recruited at the time. And then we spend money as well in terms of equipping our for external programs. And this is outside the training of internal programs that we have. We have people that we send all over various universities to grow themselves. And then one of the things which we've been focusing on in the last year was the staff wellness program, which again, as you all know, after COVID and looking at the economy of the country or the world, things have been quite tight. Most employees are in distress, and therefore we've tried our best to really bring programs that will help for employees that need that kind of assistance. When we started looking at these things, I mean, you can see there in 2018, 2019, our absenteeism was quite high, and we've been working hard to bring that down. And I think we've been able to achieve that and at the moment. And this is a world standard best practice that we have at the moment in terms of numbers there. And then also our staff turnover is something that's quite low for our industry, which we pride ourselves on that. We really, when we employ people, we want to identify the best fit for the company that will fit our culture. And we strongly believe if it's the right fit, the employees are happy to stay and they don't go ahead. And that's our staff composition at the last part there, as you can see. It just follows the demographics of the country. And then in terms of health and safety and environment, we do have external audits that help us to keep our standards very high. We have industries audits, which call us SPASA, that does audit for all our quarries. And then again, maybe before I even go that, if you look at our lost time injury frequency rate, it's something that we've been focusing on highly. It's sitting at 0.27, which is again, it's an all-time record that we've able to achieve in that time. And we are working hard with more initiatives to keep those down. And then going back to the audits that I've just spoke about, those audits becoming more and more stringent, and yet our results are keep on increasing every year. And most of them have been staying above 90% or all of our quarries in the last couple of years. And this is both from the health and safety and then environmental audits. Now, if we go on then to the communities, as I've mentioned, we've got 45 mining rights, but that's just the mine. And then we obviously have other operations, which all in all, there's about 75 sites across the country that we have. And it's very clear that here we move around a lot. Again, I've mentioned that in communities, it's an important part of the business, and that's a social license to operate. Without it, you're not going to be able to achieve what you're wanting to achieve with your mine. So what we do is we really spend quite a bit of money all over the country. Last financial, so far in the last financial year, we spent about 12.3 million across the country. One of the highlights of last year was to help companies or schools to add additional classes. This school specifically that I'm sharing with you, it was at KZN at Pietermaritzburg, where the grade 12, there's about over 70 learners who actually have to sit in those classes. And we've added 2 classes, which we haven't really fixed the problem fully, but we're able to reduce that numbers. And we're sort of proud to be partnered with that. And the same school, we also we're wanting to sponsor some best students there to go and study any mining related courses. And then continuing with education, we do have programs that we support small schools. See something is definitely. Let me just try and move back. Sorry, yeah, I don't know what happened there. It's just sensitive. With regarding additional support to our communities, we do have programs that like call it chess mini programs, which actually helps kids improve in their math skills. this is one area that we believe we want to make an impact in the country when it comes to maths and physics, because we know the quality and standard of our schools at the moment. And we actually even help some schools by sponsoring a teacher and paying for a maths teacher, because they always struggle in the rural communities to attract good maths teachers. And then we want that to contribute to that. So this is some of the projects that we have done. There's more schools that we've done last year. We had also infrastructure project where we've helped with the water reticulation project at our Olifants Book area there, which is at the Northern Cape. And the guys have been pleased that they can now have access water in some of those communities. And then lastly, I'll touch on our carbon neutral strategy. Our target we've set by 2030, we want to reduce by 32%. And we are still believe we're on target for that. Our first solar project, which we embarked on, is now fully operational at Glen Douglas. We are also looking at, with our efficiency drive strategy. At the same time, it's also helping us in reducing the use of fuel. Every new machine that we buy, part of the way we check whether it's a good machine, we look at the fuel efficiencies of that. Those are some of the things that we're looking at to obviously bring down that carbon strategy. And with the Lafarge coming in soon, we will have more initiatives in terms of how we can reduce the carbon emissions, especially on the cement factories. As we know, they're quite highly polluted. And I think that's on my side. There's quite a lot of things that we do. This was just a small highlight of some of the things that we do there.
Yeah, thank you, Colin. Yeah, it's quite an important part in the South African context to make sure, as a mining company, that we handle all these different aspects to make sure that the business is managed in a proper way and sustainable, so that we can maintain the growth rate that we've been on for the last more than 1.5 decades. So with that, thank you very much, and we'll hand over to you, Vanessa, and the Ghost, and Mark to give us the difficult questions. Vanessa, we're going to give back to you, but the easy ones we'll try.
Thank you, Andries. Thank you, Colin. Yeah, so we're going to go into the Q&A with the Finance Ghost and Mark Tobin. So if anyone does have questions, just pop them into the chat box at the bottom of your screen. We can see some questions coming through already. So over to the guys. Good luck.
Take it away, Mark. I'll let you go first. Kick off this year the right way.
Great. Yes, thanks, Andries and Colin, for joining us again. And just I want to set out at the top, I am currently an Afrimat shareholder, just in the interest of full disclosure for everybody here. Andries, we've seen a lot of kind of chit chat from Sanrail, saying that they've got a huge volume of tenders that are now going to be coming out, or in the next couple of weeks, or in the next few months, that have been kind of caught up in their whole kind of tender process for the last like 6 or 7 months. In terms of, let's say, all of these do come true, when will, I guess, Afrimat, maybe in the construction materials business, start to see that on your end? Is, if we see all the kind of positive news flow of Sanrail saying, this is happening, it's been awarded, how long does it take for that to kind of, you to see it flowing into the Afrimat business?
Mark, thank you. I think firstly, we are starting to see that, especially in KwaZulu-Natal, we're starting to see a definite pick up in how those projects are executed. But typically from the day that the contract is awarded to the point where we actually start selling, that could be a couple of months, as the contractors move on site and get themselves ready and things like that. So that would be, I would say, anything from 4 to 6 months, Colin, and then we start seeing. But we have definitely seen in this year so far, we've seen a good increase in volumes of product going into our roads.
Okay, well, that's good. At least we're starting the year on the right foot then.
So same disclosure out of the way for me quickly. So I have been an Afrimat shareholder. I'm not at this exact minute, but by the time you listen to this, I may well be again. So please assume that I may have a position in Afrimat, because these things do tend to be somewhat evergreen and people do listen to them months down the line. First question my side, and thank you, Andries, Colin, for making time for us today. I think mine is a bit of a high level one, just to maybe set the scene. You know, we've seen some horrible results coming out from the PGM players. Glencore was a big drop in earnings. I mean, that's just typical of these very cyclical mining companies that have like strong single commodity focus, like big volatility. I think a big part of the Afrimat story and the appeal historically to investors has been the diversification that you talk to, and maybe just less severe supply demand dynamics, not so much a single commodity focus. You know, if the platinum price falls off a cliff, there's only so much that Anglo-American Platinum can actually do about it. Doesn't seem to be the case for you guys. And maybe for those who aren't familiar with Afrimat or thinking of investing, or maybe a bit scared off by what they see in the mining sector, might be worth spending a couple of minutes just explaining why your journey is smoother than.
Yeah, Ghost, thank you. I think the crux of this is in the diversification, and it's not just a commodity diversification, but across industries. So, for instance, you know, the construction materials business was for a long time like a brother in jail. You know, you still loved him, but you didn't talk too much about him because, you know, you were a little shy. But that is now all of a sudden coming back. We are seeing that Transnet is actually quite serious about fixing the export rail, especially on the iron ore side. So we're starting to see a lot of ballast sales to them. We see Sunroll coming out with more work. So that is working. Then the iron ore side, you know, even in iron ore, we are diversified, where 40% of our volume is exported, 60% is sold on the domestic market at a price that is not subject to fluctuations. Then our anthracite mine, the same story, and even limestone. So we have so many different commodities. Now, on a lighter note, I've quite often said, with all these businesses, when they perform very well together, that is the year that I'll retire. And then 2 years later, chances are they'll all pull back, and then I'll come back as a hero and come and fix the business, because my successor would look like he's messed up. But the short story is that the diversification has been designed in such a way, and you can see the graph is reasonably flat. We did see a little bit of a pullback last year because of a couple of things, but you will also see that we've got very good strategic initiatives to really make sure that the business is smooth. I hope that answers the question, Ghost.
Yeah, I think it helps people to just understand why your earnings don't go up 110% and then down 80%, like we see elsewhere in the mining sector.
And there's a question in from the audience, specifically around Nkomati, and it's do you expect ongoing unpredictable challenges there, just related to, you know, the geology around that mine? Is it a case of, you know, as you mine out, kind of issues are going to just kind of pop up, and it's through no fault of kind of Afrimat's, it's just a function of the site itself, and you know, you just gotta you know, pay a straight back against whatever comes out?
Yeah, Mark, I think that one of the at a higher level, one of the key things in Afrimat is we always try to face the brutal facts. Now, the brutal facts of Nkomati is that it is, on the one hand, very, very, very attractive anthracite there, but on the other hand, it is a difficult geology. And to be able to handle that, we've actually opened 2 open pits that are in different areas and an underground operation. So if we ran into some geological difficulty anywhere, we always have the flexibility to move around and ramp up in a certain part of the mine, or move our operation around. So Nkomati is, I'm on record to say, it's probably one of the most difficult mines in South Africa. But if that's the fact, then we just need to make sure that our operational plan caters for that. And that's what we've been doing for the last 2 years, is making sure that we can handle all the different things. And then on top of that, we have some interesting communities around us. So we've got some of Colin's very best people who actively manages the communities and things like that. So what I've seen, especially over the last couple of months, is actually a very consistent performance from that business when you look at the output side.
Perfect. Maybe just to even add, so on the underground mine, we've also been working in such a way that we end up with so many phases. I think we're now having 7 phases, which again, to make sure that if there's one fault in one area, you still have many other phases that you're operating, and you don't. The target is to end up at getting 20,000 tons of ROM out of there per month. So you don't want, if there's a one phase you drop down to half, or you still can able to keep close to that 20,000.
Yeah, thanks, Colin.
I love the reference to the sort of brutal realities, and I think that bakes a lot of the resilience into that Afrimat culture. I mean, we've obviously just had the budget speech now, so if you're listening to this down the line, this is recorded basically just after the budget speech. We had Sona a week or whatever it was ago. You know, I live in Milnerton, so I can confirm the Jets work, and they practiced many, many times up and down before the big day. So it's a big month for South Africa politically and everything else, election year, all this stuff. So there's a lot of resilience in your business. I think you're used to dealing with hard things. That's just part of life in South Africa. What do you wish was just slightly better? So if investors were looking for something that gives a bit of an uplift, you know, and maybe this is a good chance to talk a little bit about Transnet, maybe it's Eskom, maybe it's public sector spending. If there was just something that could just go a little bit in your favor and maybe make it a little bit easier for organic growth, something for investors to keep an eye on, what would that be? I see big smiles there. I don't know if I've asked you the hardest question of the day or not, but it's asked now. You'll have to answer it.
Try first.
Yeah, I'll give you one of the big ones for me. It's Transnet with the rail capacity. I think we are being constrained huge. I mean, we all have seen on the coal, they're even worse there, and we have been struggling to really push volumes that we think the country can push. This is not just for Afrimat, but for so if we can see Transnet really improving in that area where we can increase that capacity, that will have a huge impact from the iron ore side. We've missed out a lot on the iron ore price in the last couple of years. I don't know if those super cycles will ever have them. Never know.
Yeah, but maybe just on a more positive note, especially in the last couple of months with a new management at Transnet. I'm part of the Ore Export Users Forum together with the other 3 iron ore exporters. And I must say we are seeing that very decisive action is being taken. There's a very thorough technical analysis. As a matter of fact, I'm actually flying up this afternoon to get some feedback from the team tomorrow, together with the other CEOs. There's big progress being done now. The thing with something like that, you know, I think about those of you that attended the Joburg Indaba about 3 years ago. You will remember that I said there that our biggest problem is logistics, and at the time it wasn't such a big thing yet. Since then, everybody's now found out that there's a problem. Now, I think what's going to happen now is we hopefully, with all the activity that is, or the focused attention to fixing the problem, we're probably still going to get a little bit worse before it gets better, because that's what happens when a place was neglected like that. But with the current management there, and I really do hope that Michelle Phillips gets the job. She's really making a difference, in my view, to improve things. So hopefully, Ghost, in a year from now, our wish will be granted.
Oh, it's good to hear there's some positive momentum. So something to hang on to a little bit, especially after reading updates like it was Kumba Iron Ore and they're cutting production and jobs, and it can get quite depressing sometimes from the outside. So that's nice to hear some positivity around this.
Andrew, so I just want to keep on the crystal ball theme for a second, and we're going to assume here that the Competition Tribunal approves the Farge transaction, and that's the final regulatory hurdle. In terms of your plan for that business once it kind of comes into the Afrimat family, maybe just talk through us about some of the things you're going to work on there? Is there, you know, CapEx to be spent to kind of improve efficiencies or get volumes up in your opinion? Or is it more just, you know, bringing it in and kind of to, you know, the second half of your presentation and what Colin was talking about, just inoculating the Afrimat culture in terms of how the business runs day to day, and, you know, that will, you know, improve and get their synergies out just simply by from a cultural standpoint, rather than spending hard money on you know, big yellow kit or you know, that kind of you know, capital hungry investment. Maybe just talk to us there about that.
Yeah, Mark, it's a little bit of everything. The big focus will be on the way we operate, on how then they will be part of us. So at this stage, it's still them. So changing the culture, getting that excellence with integrity in there. And for that, we've already identified the senior leaders that will go into that business and will drive the change. Over the years, we've done quite a number of turnarounds. And the most important part is the leadership thing, and getting our leaders to go and model the way and get the people to follow their example. We will have to spend some capital to catch up on some of the things that might have fallen behind. But in the bigger scheme of things, in terms of the let's call it the purchase price of the business, we don't think it's going to be that significant. It'll be a couple of million that we will have to spend, but the big thing that we will have to do is to just change the way the people think, the way they act, the rate at which they react to things. That, you know, to give you an example, they can get an order at one of their operations for a specific product. I don't want to go into too much detail. The profit that would add to the business would pay for a gen set within 3 months. But because of load shedding and things like that, they couldn't take the order because they're scared that they will not be able to produce. But to get that gen set, they have to get approval from Zurich, which will take them 12 months. Now, in the case of Afrimat, if something like that happens, Colin and I and Andre, our CFO, will get a phone call. Our offices are right next to each other. We'll probably approve that within 10 minutes, and the order will be placed. And as soon as the supplier can supply the generator, we'll be able to do that, and we will go after the business. And so we'll change the culture from a reactive good excuse why we couldn't do the thing to make it happen. And that's really the difference that we think that will make the big difference there.
I've got a nice hard question, which is always very exciting. So, you know, and you've teed it up so well, which is to talk about the improvements you'll make to the culture there, and you know, maybe the acquisition, and the acquisitions have been a big part of your history. It's not why you've done so well, but it's a big part of why you've done well. And I love that chart you always put up that shows where would you have been without the acquisitions versus where are you today. I think it is great, and it's that level of transparency that's awesome. But it does show that business as usual is not easy. I think it does also show that, and I think that's something to acknowledge as a key part of your business and culture and everything else. So when you're doing these acquisitions, you know, what is the secret sauce to make sure they actually work out? Because once it gets to steady state, it's not easy. Clearly in South Africa, we can see that. Everyone can see that. So is it a combination of just, you know, buying at the right price, operational improvement on every asset you buy? You know, do you always look for something that you can really add value to? Do you look for something that's kind of working well already? It's just interesting to try and understand, like, why do the acquisitions work so well for you versus so much of the steady state in South Africa? Because once you buy something, it's now still in South Africa, right? If that's where you bought it, it's still subject to all those steady state challenges.
I think you've just touched on it. One of the things is we don't buy businesses that are doing well. Firstly, we look at the businesses that have been run badly, and then we do. Andres always says, you know, it's you need to get the cheapest price you can get when you buy it. We're not overpaid. that's where we start, and where there's no value. But when we do the DD, we then can see opportunities where we can then extract that value, and that's a crucial part of it. So there is a lot of businesses like that in the country at the moment. We are saying more no's to than the yes based on that. And then obviously, as we're starting to bring it back to normal operation or to the levels, we also start to extract as much juice as we can, if I may use the word, to squeeze, to find more, continue to improve it as we can. And we never believe we've reached the ultimate, level of operation in any business. So that's one of the things that we really do.
I think Colin put his finger on it. We try to find good businesses that were not managed optimally. We then try and acquire the business at such a price level that we can afford to actually spend the time and the money to fix it. And then during the initial phases, we try to identify, we normally go in with a plan to say, we are going to change this, that, and the other, and that should give us the value. And it's normally business is simple. You must just you get more cash in than you send cash out. So make sure that the expenses are as low as possible and the revenue is as high as possible, and then normally it works.
Yeah, it's old investment banking advice, right? Is make your money on the way into the deal, not on the way out of it. So buy right, and a lot of other stuff sorts itself out.
Absolutely.
Andrews, if we can just stay on the acquisition front for a second, as we all know, you've done a lot of acquisitions, and the recent past is kind of no different. But you are a pretty much South Africa focused operation. Is it getting harder to find deals within the South African market? I'm thinking now in terms of not small bolt-on stuff, but something that's going to move the needle, whether that's a whole new division or to really ramp up one division to kind of make it a bigger part of the overall group. Just when you are the size that you are, obviously the competition tribunal and everything, more that comes into play because of your size now. And is it getting to the point where you may have to start looking outside of South Africa from a transactional point of view?
Yeah, Mark, I don't think there's an easy answer to that. On the amount of opportunity in South Africa, Colin touched on it just now. We still see really a lot of opportunity in South Africa. And as a matter of fact, I think there are more opportunities right now than we have the capacity to execute on. Yeah. So we still see a lot of opportunity. From a strategic point of view, it does make sense to start looking outside the borders, but we're not at the point where we want to go and run to buy a business at any price in Australia or something like that. We'll be careful. There's some very interesting opportunities in other SADC countries that we see. Not saying we're going to execute on any of those. But they are on the continent with specific challenges around most of them, but we see good opportunity. And a long story short, we don't always have to buy our growth. We are, if you, for instance, look at our efficiency drive, how that is actually helping the business along. There's always a good balance between your just getting your existing business to keep on performing better, and adding new platforms to the business.
I think the one thing that comes through so strongly for you guys, it is a very entrepreneurial culture. I mean, it's very much go in, fix what's broken, hands-on. It's like the way the Springboks won the World Cup. It didn't look good on paper, and yet here we are. So it's kind of like just getting it done. It's that South African grit and resilience. And that talks to why I suppose you won't necessarily easily look for stuff overseas. It's further away. It doesn't have that market knowledge. It's not like big caps that need to go and do these big capital allocation decisions from a nice boardroom. And those are often the ones that break. So I do like that about the culture. But something else, you just talk about the culture a lot, really, whenever we do these. And I think, there is a question that's come through around, just what makes the culture I suppose, unique, what defines it and what makes it successful. So I know you've talked about a bit in the presentation, but maybe a couple of minutes just around that Afrimat culture, just to make sure people have kind of heard that from you.
Thanks, Ghost. I think I will say it obviously starts with the leader of the business, which Andries, and we are so grateful that when he says culture is important, he meant it, and that's how it's been. So one of the things which we tried and did a few years ago, as we started to realize how important this culture is, we came down as a leadership and invited more other mid-management senior and said, what are those things that define us that we want to fight for, that they want us to make sure that we protect, going forward? And we try to put it in writing. And what we've been doing as well is after that, that's how we even survey our culture in the group to see if that culture is still coming through. So that's how we try to roll it down, because we accept that, the leadership or Andries won't be there forever, and some of us won't be there forever, but we need to make sure that that culture is rolls down. A good example, we had a chat on the board yesterday, for example, again, in terms of, if you want the culture of an entrepreneurial culture, you will need to be able to take some risks. You will need to allow people to come and come with crazy ideas sometimes, which sometimes even if you don't believe in them. So about 4 years ago, Andries, there's a few guys who came to him and says, Andries, we think Afrimat needs a logistics company. And Andries says, I've never seen a logistics business or truck business make money, and it's not going to make money. And I don't think it's a good idea. And these two youngsters, they said to him, look, give us a chance, give us 6 months, we can rent out trucks and we can want to prove you wrong. And then he says, go for it, and I'll be gladly like you to prove me wrong. And as we speak, that business has grown exponentially in such a way that in the 6 months last year, they were looking at making over 10 million profit. Business that started from nothing, there's almost 40 people there, there's about 23 trucks, they are subcontracting more, and that's the culture. That's the culture of allowing people to take risks and not able to shoot them and fire them. And same with the board. We've made mistakes. The board, we are open to share that we have made some big mistakes, and the CEO's job is not on the line because of that. And So that's some of the things that I can just share how we try to roll down the culture. So if Andries want to share anything.
Yeah, maybe. Yeah, I think the crux is that we've defined the culture. We have active programs to make sure that that culture is entrenched. We measure from time to time with surveys and things like that. We find those areas where we are deviating. It is a challenge, as we grow and we bring more and more people on board. It is a challenge to keep that culture alive. But we've at this stage we're quite happy. And Colin, you should have just given a disclaimer. Because before he said that what he said about me, it is our salary increase month. So I just want to put a disclaimer on any positive thing Colin said about me.
Thanks, guys. I think we're just about out of time and out of questions as well. And yeah, I think that's a good way to finish on the culture piece. And yeah, it's good to hear. It's coming directly from the board as somebody who's worked in a couple of big corporates before. If it's not coming down from the top, any talk of culture is like absolutely dead in the water. Culture flows down, it definitely doesn't flow up. Vanessa, do you want to wrap up for us, please?
Sure. Thank you very much to everyone for that. And thank you to everyone who participated in Unlock the Stock today, and a real special thank you to Andries and Colin for again making time to support this initiative and to engage with the investors. So we hope that everyone's enjoyed this event. It will be on the Unlock the Stock YouTube channel a bit later on. And very excitedly, we have the next session happening on the 14th of March, where we have We Buy Cars. As you know, there's some corporate action there, which is great. We also wanted just to let you know that we have roughly about 15 different companies that are lined up for the 2024 year for Unlock the Stock thus far. And for those on the call, if there are any companies that you want to hear that might not be there, drop us an email and we can try and reach out to them. Otherwise, thank you again, Colin and Andries. Thank you to everyone who participated, and goodbye.